Welcome back everyone to the Polar Trading YouTube channel. Now today I'm going to be going over a trade I took earlier this week post FOMC. So the trade I took was the British Pound Sterling, GBP against the USD. Now what we'll do is we'll jump over to TradingView and actually go through the actual setup so you guys can get a bit of a insight into how we trade at Polar. So jumping onto TradingView, you can see here on the left we have the US dollar index and the right this is GBPUSD. Now, when we are trading USD pairs, we always start our analysis on the US dollar index. So I'm going to zoom in on this chart real quick. So, looking at dollar index, you can see here, in July, we ran out these relative equal lows, and then we've been trading higher ever since. Now, my eyes are drawn to this high in March. So you can see here, on the daily time frame, we've been trending higher. So a high time frame, institutional order flow is bullish. Now, commitment of traders stepped in down here, and they've been hedging out of shorts. That's when we talk about commercials, central banks, large financial institutions, that sort of thing. So they're hedging out of their longs. Now, seasonal tendencies are bullish from September all the way to November. So we've got seasonal tendencies backing our trade. Commitment of traders are hedging out, but technicals are bullish. So looking at a bullish bias on dollar index, you can see here, if we mark out some key levels and zoom in on this particular chart, you can see here we've got this little fair value gap right there. So I'll drag that along. We was looking at that fair value gap to hold price higher for this week, as well as the bearish order block that I'll mark up with a line just here. I'll make that normal line. So let's jump into the lower time frames. Let's go to a 30-minute chart. So this grey shaded area right here is the daily fair value gap, and you can see how we worked in that on Monday, worked in it on Tuesday, and then Wednesday, FOMC, we had that displacement higher. Come 2 p.m, had that rally higher, shifting market structure, confirming the reversal as we traded above and closed above this fair value gap. So to me, I was looking at Thursday, okay, we could be long dollar index to run for March's high, which is marked as this line right here at 105.88. So I was looking for it to run up to there. We didn't quite get it. However, we was looking at pound news on the Thursday as well to take us that little bit lower on pound if we could get that boost from the dollar index. So you can see here in the London session, we traded lower into this new day opening gap right there. So looking at that about 2:30 a.m. right there, as we drop down into that, that's where we was looking at sterling. So let's jump over to the sterling chart. So you can see on the daily time frame, again, we've been trading lower and lower and lower. Fair value gap support there, bearish order block there, fair value gap here, and then we've just been trading lower and lower. Now, we was looking at this low, which was breached on the Thursday. So let's jump into the lower time frames on sterling and show you the actual trade setup. So looking at the lower time frame charts, we can see that Tuesday created the high of the week, and then Wednesday formed a lower high, whereas on that dollar index chart, Wednesday created a lower low. So if you guys are familiar with SMT, you can see that here it was telling us that sterling was weak, especially after the FOMC traded lower. That's giving us a strong bias short. Now here on the Thursday at 2:30 London session, at the same time as dollar index traded into that new day opening gap right there, we can see sterling, we had, if we go to an hourly chart, we had this hourly fair value gap. So at the same time as dollar index traded into its key level, so did pound, which basically means, that's a very good trade setup to take pound lower. So as we traded into there, that was my short position about halfway into this fair value gap. My stop loss was about 16 pips, I believe, roughly here. And then my target was about 3R, and then we got out just before that. So if we drop down to that 5-minute chart, this was the trade setup. Now, we didn't catch the full move, but we don't need to catch the full move. As long as we've got that positive risk reward, and obviously we win more than we lose, which we do, because here at Polar we've got roughly 70-80% strike rate, we can still make pretty good money. So what I'll do is I'll pop the MetaTrader screenshot right here, and then obviously maybe some results from the group, other people taking the same exact trade setup independently. So this was the one that made us about 1.5% with 0.5% risk. So yeah, I hope that gives you a bit of insight into how we actually trade at Polar. And we will see you in the next video.